Welcome, Toby, to Seattle Network.
Wonderful.
Thank you so much for being here with me today. I am so excited to talk to you. I'm just really, really happy that you're going to be able to share so much of your personal experience and journey. But even how we first met, we met a long time ago, like a long, long time ago at University of Michigan, and was at the engineering library where the engineering and art actually meet together.
Right.
So that's been always a thing. And then since then, you were at Microsoft after you graduated. At University of Michigan, you graduated and you went to Microsoft as a software engineer. You had a fun time living here in Seattle. So,
It's wonderful. Absolutely loved it. One of the best places I've ever lived.
woo, I want to live here and don't leave. And then so you were a software engineer for a few years, and then you said, "Hey, I think I should go back and hang out at Wharton," which is really annoying for me. So you went to Wharton. You went to get your MBA. You networked around, and you found your wife there. And then at that point, you went straight into the hedge
Mi-
fund. Yeah, and you started up that VC arm, and from there it's been like history, it feels like.
Yeah, it has been a wonderful ride. Certainly moved around the country. I was initially grew up from East Coast, DC, and then I went to Michigan, Seattle, back to the East Coast for school. Now back to the West Coast for the last 10, 12 years or so.
Oh
It's
my
been a pretty
goodness.
wild ride.
Yeah, yeah. So help me understand. Can you go through a little bit about how you went from an engineer? Because a lot of people in my network, a lot of them are technical founders. And so I just want to give you a little heads up. A lot of them are technical founders. A lot of them are business executives as well. So huge stakeholders in meetings and making business decisions. And I'm so excited with what you're going to share because I think a lot in the startup community, especially if you're an investor with a portco,
Hmm.
you might not necessarily know what also happens on the other side. I feel like you can really shed a lot of light, between what happens between the VC and the LPs, basically. And then also, though, I think I would love for you to shed the light of why and maybe how to remove the resistance between the investor and the founder, like that
Yeah.
dynamic, depending on which market time we're in, because sometimes I feel like that's a little bit of a power dynamic depending on your role and
Hmm.
responsibility, depending on the market situation, depending on the state of the startup,
Hmm.
depends on your cocktail recipe of who your talent crew is that you're dealing with, and then how everyone's just kind of in the same boat together. But at the same time, when you're releasing funds and you're trying to give the operators the chance to operate, but at the same time when you're probably trying to give guidance as well of
Hmm.
how to leverage those funds. And then from a VC standpoint, what you have to do, because you're also human, so you're also taking the calls, you're also talking to people. So having that insight of like how that actually works might help to ease and understand for people to understand why, or operators to understand where that pressure is coming from their direct investors, and why they are kind of maybe a little bit more micromanaging than you might here through the books or through YC and stuff like
Yeah.
that, through the Reddit, Vortex and stuff like that. So you are the real deal to showcase, and you have that background of being an engineer at first, which now you're probably, like you said, you're probably a terrible coder and worse coder than your daughter in her robotics
Yeah.
class.
Yeah. Sure. Happy to share. Yeah, so I started off my career at Microsoft after I graduated from Michigan. It was actually a really good experience. Starting off was a big firm, really, well, big company, gave me a lot of sort of insights into um, how does different functions or how does big organizations work, especially shipping, the Windows product, or at that time I was working on the first generation Surface tablet. It was a sort of cross-discipline, cross-functional, and various teams all across the organization coming together, shipping sort of one of the, oh, I guess Microsoft's first flagship hardware. all-in-one device, right? It was a pretty daunting challenge, and it was a very rewarding experience. But I think the most important is essentially know how to work with other people. I think my biggest takeaway there is, how do yeah, as a fresh grad, right? How do you work with so many other talented people?
Hmm.
And it was actually challenging. You'll see that sort of in a large organization, communication it's so key, and at the
Right.
same time, it could also be a burden for slowing things down. And one of my biggest takeaways there was essentially, working with a team that I liked, and essentially having a boss, my manager who was really caring about the team, and really helped to shoulder a lot of the responsibilities of what we're doing, especially we sort of have to invent some of our own processes for
Right.
shipping this product. And it was great. And 3 years out of that, I realized, wow, I've sort of learned everything I wanted to learn. And the one thing that sort of caught my attention was the people that I was working with. They've all been in Microsoft for 20, 18, 25 years, etc. And their goal is to retire there. And they have a very comfortable and fun job and very good work-life balance. I did too. But at the same time, I didn't want to retire there. I wanted to sort of challenge myself and sort of keep learning and try something different. And at that time, I actually didn't really have a lot of interesting ideas. So what led me to business school was to, yeah, essentially, look for
I love
inspiration.
when you say that.
Yeah, I was looking for inspiration, looking to
Yeah.
find what's next. And and interesting enough, while you're in business school, I was thinking about, joining earlier stage companies, startups, right?
Okay.
Or essentially just go to a place that's much smaller than Microsoft, something
Hmm.
where, I get to invent and do more, sort of, and have a bigger impact at a smaller organization. I thought that would be, really fun. And while I was in business school, I also didn't come up with a good entrepreneurial idea, or I didn't end up joining any startups. I wasn't able to find something
This
that was good.
failure rate, Toby.
I know it was a strike two, right? It's
Yeah.
in a short period of time, and business school is very costly. It was very expensive.
Yes, of
Um,
course.
but what I did land on was something close. It was I ended up joining a firm called CRCM Ventures, and at that time it was essentially a hedge fund since its beginning, and it was moving into the venture capital space. And I joined the firm essentially as a sort of a member of a three-member team out of that CRCM firm, where our job was to sort of run the first venture capital fund. And
And can you tell like who the other two, like the type of the other two people were?
yeah, the
So
other
it's
two,
like your team and how that the complementary strengths that you may
yeah,
have and
sure. One of the other two was the founder of the firm, so he, helped start this initiative. And the other one is an analyst, and who later left as soon as I joined the firm, about a year and a half. She actually left the firm to go to Harvard Business School, and
of
then went on to
course.
do other things, and then later came
She's
back
like,
actually.
just on here. Toby's here.
Yeah, it was no, it was really interesting. I mean,
Mm,
it was in many sense like a startup, since we were sort of building the
yeah,
business from ground up, right? Starting from
right.
the people, and then from the first fund, making investments and making good decisions, and then move on to the next fund and fund after that and after that. So I guess fast forward from, I guess when I joined the firm was 2014 till now, 10, 11 years later, the firm is much bigger. It has more than 1 billion in AUM under management across various disciplines. Venture capital is still one of its core sort of business, but the firm continues to have hedge fund practice. It has a cryptocurrency practice. It has a healthcare practice. It also has sort of various strategies on later stage investing as well, which is somewhat complementary to the early stage venture funds that the firm
Hmm.
runs. And it's been great. And the team has really added more people as well. So I guess the VC practice grew from a three people practice into, I think, as the largest was like 28 people across investment professionals and operational professionals. And it was really fun. It essentially is it's a big family. And And I was so fortunate to be sort of part of that, and was able to help build this organization. So that was sort of
Yeah.
my transition. Yeah.
That's crazy. And can you speak to about the when you were able to have the wins and what you were able to do with the staff of like the total 28? Because that is really cool that I think should just be the standard across the board. So that's why I wanted to talk about it.
Yeah.
Like the retreats and stuff.
Oh yeah, yeah, yeah. I mean, we want to build a good, like a very good um culture for our people. So I think started in 2017. Um, we started to have sort of annual offsites for everyone to get together to sort of go through the year and to summarize everything, every team to sort of present some of the stuff that they learned. And we started the first one in San Francisco, essentially. But then later on, we moved more offsite to like other places like Hawaii, like Thailand and China, etc. And and essentially brought the whole firm together, and also invited everyone's families as well. So it's a good time for, more than just work, but also get to know each other, in a more personal setting, and also just have some fun, have some downtime. And it has been a sort of a great way for the team to recharge, especially at the end of the year, and spend time both with family, I guess our individual families as well as the firm-wide family, and that sort of cohesive culture was something that we wanted to build from pretty early on, and well, except I think 2 years was in COVID, but
Hmm.
before and after, we've all had sort of this annual retreat thing. Um, yeah, that is, that's still there. And I think, t to touch a little bit about sort of what we do, from sort of, behind the scenes, and how VCs win and lose, etc. It's it's very interesting because,
Yeah, the game.
yeah, like
Let's
a
talk
lot
about the
of
game.
yeah, before I joined this industry, it was a mystery to me, and I think right now it's still a mystery to many people. Like, VC is,
Yeah.
you know, I guess in the social media, or in traditional media, wherever, it has always been sort of glorified as a, fantastic career, right? Whereas, a very sort of lucrative career, and people make a lot of money, and they're sort of always, investing like the next, you know big things. And while some of that is true, but a lot of those behind the scenes is actually pretty different. Like VC in large, I would say it's more of a sales job than a technical job. And it's really interesting. It's really interesting. Like, because we look at a business, the actual investment part of it, like you meet with companies, you decide a thesis, right? And then you make an investment. It's actually more like 20-25% of the job. A lot of it, of the work actually comes before and after. Like how we go out and pitch LPs, limited
Hmm.
partners, to bring funds into money into our fund. That accounts for a large part of the job. It's like 40-45% of the job. Investing is part of it, and post-investment process is another part of it. It's, essentially it's to help manage the companies, help to bring them to maturity, to exit, etc. And if we look at sort of the life cycle of this business, it's very sales driven, right? We first have to sell ourselves to our limited partners, right?
Yes.
So,
Yes.
sell our vision, sell sort of
Hmm.
what, our fund is about, why we're different, why we can
Hmm.
make those outsized returns. So we get the money there. Second, we
Wait,
sort of,
hold on. Sorry.
go ahead.
Even with that alone, that
Yeah.
snippet alone, that should resonate a lot with founders when they're
Yes.
pitching as well. So
Oh, yeah.
that should be a common ground that,
It is.
there are rejections and also, you're trying to find the right fit and, having that alignment and that upfront agreement of, do we want to do the same thing?
Absolutely, absolutely. And it's very similar in the sort of the law of large numbers game, right? And it's sort of very network driven. And also, at the same time, I guess the only thing different is, our target, it's a little bit different. We sell to, endowments, family offices, fund of funds, corporates, etc., versus, the startups. sell to VCs, right? So, but then, interesting enough, when we start to invest, there's also a sort of somewhat of a bi-directional sales going on here. So while some startups, right, are pitching to us, they're selling us their story, we're doing the same thing to them as well. Like we also have to sell ourselves and, and convince them why we are the better, the most optimal financing partner versus another VC firm. And
Right.
that part, it's something that a lot of folks don't really see as well. They always thought that VC is a job where we sit behind the desk and just startups line up and we just check a mark, invest, not invest, right?
Yeah.
It's actually a little bit more than that, right? We have to get on the other side of the desk sometimes, actually a lot of the times, and has to have to pitch to the startups on why we can add value to their business. And then ultimately, finally, like we have to help the startups to sell, to later stage investors or the public market or a corporate that end up acquiring them, etc. So along the sort of the life cycle of this business, it's a very sales driven sort of practice, which is very interesting. I think it requires certain personalities, certain type of like workflow that's very different just by reading what's available in public media. But once sort of behind the scenes, you realize, wow, there's actually you know it's not all it seems, and it seems like there's a lot more involved than just writing a check to a startup. And then
Right.
the second thing I think I'll mention is sort of a lot of this business is luck driven.
Yeah.
So, it's very interesting. It's like going to a
Yes.
casino, right? Or toss the dice
Mm.
and see how it goes. But interesting, why is luck driven? Is and sometimes when we talk to peers, other venture firms, or um when other VCs are sort of on a panel or talk about, they only talk about, well, most of the time they only talk about their last wins, right? Like
Right.
what their biggest you know
You're
uh,
only as good as your last deal.
yeah, they talk about their biggest like logos on their website.
Of course.
I think a good question to ask them is, what are like the last three logos that they took off their website? And nobody
Yeah.
answers that question, or
Yeah.
they don't even know, or they're too embarrassed or something, right? So like it's when we look at sort of this business, um, it's still a lot of luck involved because if we look at the end of the day, it's like, are venture capitalists very smart? Yeah, I think people are very capable. They're in the job. They are pretty smart. But just by how intelligent they are they able to outperform other venture firms with a consistency to do it? I think just on intelligence alone, it's not gonna work. Actually, there's gonna
Right.
be sort of very interesting ways for portfolio management, ways to sort of stretch out your luck, and essentially stay in the game long enough without striking out to hit luck, right? And when luck comes, yeah, it multiplies. It's an
Yeah.
essential part of the business that it's hard to quantify, but it's
Mm-hmm.
such a large sort of factor to success in the venture capital business. Sometimes, we could be directionally correct on what to invest, but it's very hard to measure the magnitude of how big a company can be.
Right.
Like,
But that's also like, with Portco, right? It's like when you're into, because I think it's the interviewing. You said so much in that bite. So I want us to break it down a little bit
yeah,
because I feel like people would miss a lot of some things. So one is like, when the interview part. The
yeah,
interview is both ways. If you're a
yeah,
sophisticated professional, you will know that when you go and interview, even for a 9 to 5 job, it's actually a two-way street.
yes,
You want them as much as they want you. And that would be the best kind of deal. And so at this even high level for a lot of monies is kind of the same thing. Two, for the sales part of it, I mean, oh my God, you're totally right. It's so interesting how, they also, it's just like the money changes just keeps on going, There's like this
yes,
ecosystem, this food chain, right? So
yeah,
it's like a lot of founders think, oh, it just stops at like the VC kind of thing. It's like, no,
yes,
no, 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 no. It like and branches to all these other areas, and they're really having, they have your back and they want to have your back. And that's what that commitment, that analogy we always talk about is like you're married to your investor in a way, like it's a 10-year marriage commitment kind of thing. And it sounds kind of weird because it is usually kind of male dominated in that area, but it's just a reflection of how tight you guys have to be, and you have to
Yeah.
be so communicative with each other. You're gonna get into some arguments. There's going to be some dynamics, there's a lot of interpersonal skills that are necessary to
Yeah.
dive through some really hard times, some really hard conversations. And if that's something that you're not used to having, I would really recommend for anyone listening to this to check your attachment style. That would be very helpful. Understand where to grow and do better. But the other part that you were talking about is, besides the interview part, I think it's like when when founders are trying to pitch, their story is not just to the investors. There have to be a salesperson everywhere. It's this house I keep on talking about. You gotta sell to the front of the house, the people who are walking by who might look into the window kind of thing, about your prospects who might become your customers. Then you have to sell to the side of the house. The side of your house is all the talent acquisition. You want the right people coming in, the
Yes.
A talent. You don't want B talent or C talent because then your money's going.
Yeah. Yeah.
And then it's just the churn, right? But, you have to make do with some things, but you still have to sell a story there as, a founder. And then the back of the house, when they see all the shit's happening, which is, in the kitchen and stuff like that, that's your investors. But each one side of that story is not the same, but that's the same thing on the VC side is what you're saying as well.
Yes.
Your story, whether it's these family offices or, even for your networking to the press and all that kind of stuff. Like you guys are talking to all these different areas. So you're doing the same thing of selling the story.
Definitely. Definitely. It's super important part of the job. Yeah. And, that's sort of, that shines through more oftentimes than sort of a certain investor's technical abilities or analytical prowess, right? Like their ability to, network and get into the deals or working well with founders and other co-investors and limited partners actually are sort of invaluable to a firm, a successful VC firm.
Yeah, so like even the updates that investors are asking for, because the updates I think investors ask for, like compared from a Series B to like an early stage, is like completely different
Yeah.
because of the maturity of the company. But not only that, like the early stage, there are a little bit more difficult conversations to be had just because you're also exploring what are the skill gaps along the way and how to work with each other.
Yeah.
So can you help shed some light maybe from kind of like why VC investors would really need the kind of updates.
Mm,
And when you know that things are not going right, how can a founder be a little bit more proactive, or how for them to just
yeah.
be on the same page in some shape and form, but it doesn't feel like homework and it feels like you're really on the same team
Yeah.
because technically you're coming out from the same pocket.
Sure. Sure. I'd be happy to share. So from a VC's perspective, right? Like once they made an investment, they can only do a couple of things afterwards. Well, what they cannot do is they can't ask their money back. Well, I mean, in some ways they can, but it's sort of very weird and nobody actually does that. Like, but what they can actually do is to help make the companies that they invested in get a higher chance of being successful.
Yeah.
And they can help them to sort of alleviate some of the challenges that they have, whether it be, talent recruiting or, business development, acquiring new customers, or other sort of things that challenges that they may have that VCs see a lot from other businesses. That's, sort of shared challenges with the new investment, right? Like, for example, every company needs to file taxes, right? Every company needs or many companies will need to work with vendors or work with part-time employees or contractors, how to best manage that. Every company needs to incentivize their employees. How do you create sort of an incentive, like incentive structure that both motivate people as well as, affordable for the firm
Yeah,
so that the
carrot
firm,
sticks are really important.
yeah, exactly. So the firm can, the company can still continue to grow, right?
Yeah.
Without, giving too much away, right? So
Right.
there are sort of those shared learnings that the VC have seen for, across so many different cases that they can bring those experiences into a startup and help them to sort of alleviate some of those challenges. And those are things that VCs are pretty good at. But there are also things that VCs are not really good at. So, for example, VCs are typically not very good at running the business that the company that they invested in. So,
Fun
so
fact.
say like, yeah. So say like the company they invested in is
Yeah.
it's an e-commerce company, right?
Yeah.
The VCs are typically not good at, selling to consumers or finding the right target customer or something. Or say if it's a fintech company that work with banks or something, or their customers are enterprises, VCs may not be very knowledgeable in that, space or aerospace or satellites or whatever, right? So the core business still needs to be operated. The core strategy still needs to be defined by the founders and the founding team and sort of the smart folks there. And the VCs needs to learn to trust the judgments of these founders
Yeah.
and to help guide them, but not necessarily tell them exactly what to do. And on the other side, the founders needs to understand what advice to take from VCs and what advice to ignore. Because
Hmm.
sometimes VCs are not very good at. They very personable people. They like to talk. They like to give a lot of you know
Yeah.
you know right like
It's not
these guys are,
working.
yeah, exactly, right. So
Yeah.
the founders needs to know like or get better at when to
Mm.
tune out some of this noise, and a lot of it's noise, and how to find sort of the important things that can help make their businesses run better. And that's sort of one of my biggest takeaways as a venture capitalist was, I try to talk less in board meetings, try to listen more, and try to find things where, nuances for our founders, where, you know, that's slowing down their core business. And those are the problems that we feel we can help them um, to sort of solve, right? Like if they're looking for, you know, key members of their team and they're having a hard time finding the people, and because of that, their business is slowing down. Then we would actively help them, help introduce them to executive recruiting or help them to recruit directly to find those key executives or key people within our networks that can be immediate value add to their business to help unblock them to their next stage of growth. And those are things that VCs can get really good at to help the founders.
Yeah, and I think let's break that down a little bit because a lot of the things that you see, especially on social as well as like or within the private communities as well, is very much okay, I'll give you an intro, I'll give you an intro kind of thingamabobber. But
Mm,
I think when people are on the other side of the fence, it's like, what are you actually introing for? Kind of thing, and
yeah,
being kind of really upfront on like what you actually need and what you're looking for, and rather than it's just like a hype announcement kind of thing. Because then, like you said, it's
yes,
like noise, but then it goes back to about interviewing and about time and quality as well that you want to actually bring on board and how to
right,
really attract that, which goes back to the skill of sales.
yeah,
And then so leaning on your VC of like, okay, this is, I feel like I'm getting blocked in this area because we don't have a complementary strength here, kind of thing. This is kind of what's weighing us down. If we have someone who's an A talent that can do X, Y, Z, can you help us with finding that to help with the core business? But then I think also putting it
mm,
into the roadmap as well as like, okay, these are the metrics and measurements. And I think that's kind of the where the proactiveness really isn't it. It's like it's
mm,
okay to like fail and not meet it because you're kind of experimenting all the time, the whole point of a
right,
startup. But it's just like, trying something rather than nothing at all. The cost of inaction is greater than,
mm,
the risk that you're even trying to take.
right, right, yeah, exactly. I think from the startup side, the best way, well, I guess one of the best ways to work with the VCs is to essentially know uh, what help that they need. Like essentially, like so, what help to ask for. So sometimes the founders, maybe a little bit too quiet, right? Or if they, now they have they have money coming in from VCs and a bunch of people around the room in their board meetings. Now the founder is like, like maybe I should just report to these guys and let them know, how things are from quarter to quarter. Sure, part of the job is to let your investors know what's going on, but the more important part is to know how to ask them for help and which part of help that the founder should ask for. And and some of that require coaching as well. So like the one, yeah, like some of the times, yeah, like I sit down
Yeah.
with our founders and I'm just asking them, was like, hey, like what's keeping you up at night? Like
Yeah.
what's going on? Like what's bothering you? You guys seem like doing well, but you seem so stressed, right? And
Hmm.
things could be like, oh, I have this long-term employee who has been with me for day one. And but
Hmm.
this person, just constantly getting distracted now, they're no longer as motivated, or they
Hmm.
have, they don't seem to be like a team player. How do we deal with that, right? Or they may have personal issues or things like that. There are certain things that's behind the scenes that sometimes it's not easy to share in a board meeting or in a group setting, but sometimes on a one-to-one with our founders, sort of these things emerges, and we have to help them, help them to solve sort of all these little things that's distracting.
And what would be your recommendation in because, especially in the VC side of things, you're not usually putting a bet on one founder, you're usually putting a bet that has multiple co-founders.
Mm,
And so let's say if your direct line is usually and should be the executive decision maker who is the CEO,
mm,
but instill that there's other co-founders. But as you know, there could be other point of views that would actually give you maybe the information necessary
yeah.
that might not be communicated as well. But the other, co-founders might have the actual information to actually share
Mm,
what is actually happening that allows the VC to put all the parts together, like almost like, the role of HR.
yeah.
What would be your advice on, for a VC investor and also for the co-founder who may not have that direct line? And, you can't
Mm,
wait in startup land. You can't wait until the next quarter board meeting to like bring something up. So how have you seen that gap kind of close,
yeah.
if anything?
You know, I think good founders and good investors are typically good at keeping in touch with each other. I mean, everyone's very busy. But when something is urgent and important enough, like they don't need to wait until the next board meeting. And a good investor should have their founders on speed dial or should have their
Yeah.
direct numbers and vice versa, right? Like they don't need to send an email and wait for, the response. Rather, they should be able to text each other or call each other right away, and
Yeah.
to be able to talk to not to talk to each other. And obviously, they shouldn't, like, no one on either side should be abusing that line of communication. But it's that line of communication should exist, to handle those both urgent and important matters. And then in terms of sort of uh, evaluating a company and looking at, from its leadership, whether the founder or the founding
Yeah,
team.
because it could be a complete wipe off.
Yeah,
You might like that is a possibility, right?
yeah.
Um,
Like,
Unfortunately, but
yeah, it's
that could be a thing.
it's interesting because the human factor is still the largest part of, at least for us, in early stage investing. It is still one of the largest you know elements of our decision making. And 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 it's a little bit hard to do, like, no matter how you look at it, because from meeting a company, getting to know them, and to all the way to making an investment, that time frame is actually very small, very short. It's like
Yeah.
it could be a couple of days to, at longest maybe a month or two. And is that enough time to really get to know someone,
No,
or get to
it's
know,
not. They did research
it's
at
not.
the freaking
Yeah,
universities. It takes like a quadrillion hours to even be a friend.
yeah, yeah. So like, that's it's hard, right? It's hard to
Yeah.
get to know someone really well, and what motivates them and what takes them off, and why, this person could be successful, etc. So
Hmm.
like, we'll never be able to sort of 100% get to know, how this person behaves, or like if this is a good person, right?
Yeah.
But what we can do is based on, our historical experiences working with a ton of other founders, and based on their background, their historical successes, what they've done before up to this point, we can sort of make an educated guess on what their futures are like, right? And it's never going to be too accurate. I think the circumstances change, right? Like I tell you, I have funny stories about I have a founder where we invested in this person, and at the time, we thought, this is a very highly educated person on, at least on paper, right? Like great degree from big name universities, have, tremendous of success at bigger companies earlier, went to launch a startup. And a year later, this person came to us in a meeting and said, "Oh, I don't want to run the startup anymore." And we asked them, "So why? What's going on?" It's like, well, the person said, "Well, I was married, and now I'm no longer married. And when I was married, I got used to a certain lifestyle that I really enjoy. And now I am single by myself. I still want that lifestyle, and the startup isn't giving it to me." So it's kind of like, how do we deal with that? Like, are we able to see that this person, didn't have, the ability to, you know, weather through, challenging times, or challenging economic times, or have such a sort of, place such a high importance on certain lifestyle that
Yeah.
they have, and then no longer, is able to obtain, right? Like that wasn't even something that came about, in due diligence. How can you tell, right? So it's like sometimes you get surprised by these kind of things. It's
Personal references, Toby.
yeah. I mean, we do that too, and personal and professional references, etc.
Yeah.
But at the end of the
Yeah.
day, like sometimes you still get blindsided by some of these things, and it's unfortunate, right?
Yeah.
But the thing what we can do is, just try like do our best to identify certain traits or certain patterns that we see across, many founders, and see if the next one also, you know uh, shows, some of these characters and traits, and we sort of make an educated guess. Yeah. It's never going to be perfect, but
Yeah.
yeah.
I love what you were talking about, the increasing the surface area of luck, because
Mm,
for me, I feel like this whole thing about luck is so true. It's like you even talk about this blind side, like you never know what you're going to get blindsided with, and you always have to be ready to the best thing you can control is your reaction, right? It's like, okay, well, what did I get into? What did I agree? Did that person hold up whatever that they agreed to do? Did they know what that actually meant? Are they good to even do business with? Do they understand certain things about business that requires a lot of human factor of that know, like trust,
mm,
and communicating with other stakeholders. And then also, but the increased surface area of luck is like, I always feel like luck is where preparation meets opportunity.
yeah.
And so like for me, it's always like, oh, just always be ready. Always be ready.
Yeah.
And when the right time comes, when the right time comes.
Yeah.
And when you're talking about the VC investors of
Yeah,
like when they
I
ask
have
them
a
about,
really
mhm.
good example about that, like very
Oh,
recent
okay.
example.
Yeah. Yeah.
I'm like, you gotta be ready to strike luck, right? Like, and I don't know if you pay attention to sort of the cryptocurrency space, but as President Trump recently released a coin, like a Trump
Hmm.
coin.
Yeah, the Trump
It was
coin.
like a huge thing in the news. And it's interesting enough that we saw the news on the day off, like when he tweeted about
Yeah.
it. And it's almost, and for some people, they were able to buy this Trump coin or invest in it right then and there, and be able to capture sort of this multi-hundred X upside within a day. Within 24 hours, this thing went like 200, 300X. Like people literally changed their lives overnight.
Mm.
And and it was incredible. It just kept running up. But the problem was those people were very, very prepared. And there were others who are not. I'll explain why was that. Because the people who are prepared, that they already had certain digital currencies in their wallet. They're ready to make a bet in this space, and they were able to make the investment. The people who are not prepared, they didn't know how to get money into their crypto wallet, or they don't know how to switch from Bitcoin to Solana, which they had to use to buy the coin. And because the network during those 2 days were so congested with people wanting to get in, that just for moving cryptocurrency from one place to another or swap between Bitcoin to Solana or whatever, it typically takes like 10 seconds or less. Took 12 hours. So in those 12 hours of when things are stuck, network is congested, there's no way for them to actually even make the investment. They weren't ready. Like even if they
Right.
had the sort of the decision making skills to say, hey, I want to do it now. I need to invest now. They simply could not, since they were sort of slowed down by
Okay.
whatever's out
I
there.
have to connect this to marketing. I'm sorry. I just have to.
Mm-hmm.
Okay. I have to because this is how being a profit center for Microsoft and Adland was able, like I was able to grease the wheels and we were able to pump out so much work and deliver on time. And not just Microsoft, but the other accounts that I worked on. And it was because being prepared, being prepared for anything that was going to come our way, something that came from the media agency, something that came from the clients as well, the marketing clients of, hey, we just got an extra 10 spots kind of thingy. Like, what are we
Yeah,
going to do with that? It's like, oh, we got a bonus, kind of thing. Or it's like, oh shit, well, let's grab this key visual, this, that. You have to know what your assets are. You have to know where they are. You have to know where they live. You need to know who you talk to. I had a whole white list of like resources and everything. So if we had a massive other opportunity, we had bringing people on that week to deliver at the end of that week. And so having all of that, so you like know what to bake your cake.
yeah,
You know where your ingredients are, because if you don't know
yeah,
where your ingredients are, you're like, I don't even have my measuring cup and this and that. And you're saying like, man, they didn't even have this set up. It's like, even for a bank, it's like, you can't accept money if you don't have a bank account, for example. It's the most,
exactly.
just like the most simple way to explain this of like, and that goes to even a founder as well, or, any executive. It's like, how can you deal and react to certain things when, if you're not at the, if you're not at the ready and you're
Mm.
not, because then you can't complain about it, right? It's
Yeah,
either you're part of the wave or you're not. And
yeah,
then maybe, and so it's just like, well, then maybe next time. But at the same time, it's like, well, you should have maybe been prepared. So how can you be better at prepared and not be in a state of reacting because you're going to lose? I love how you said that the congestions of it, because it's so true, because you never know what's going to happen, but how can you still deliver? How can you deliver for yourself? And then you're like, I want that opportunity and seize that moment.
yeah,
Like,
yeah, yeah,
oh
absolutely.
my
It's
gosh.
it's just a recent story, and it's
Yeah.
interesting. I've and coming back to sort of from how VCs um sort of stay long enough to get to that luck, right? And
Oh, yes. Let's talk about
it's
that. You
yeah,
know very well
part of
about
it is
that.
yeah, yeah. It's just one last point I wanted to make is that
Yeah.
like a lot of people think VC is about sort of hitting a really big deal and be able
Mm,
to exit and just ride off the sunset, right? Like it's sometimes, well, actually it never really works like that. The whole business is more about risk management of a portfolio rather than sort of finding the next Twitter or the next Instagram or TikTok, for example. Like
yeah.
from a sort of a venture perspective, every fund that we have to sort of run it as a sort of a portfolio of companies. We have sort
Right.
of our own internal sort of strategy or schema on how to allocate capital. Like how much money to reserve for initial deployment, how much to
Mm,
reserve for follow-on deployment, and what is sort of the maximum cap, like percentage of fund that we can deploy in a single position. And we always have sort of a internal model that I learned from my partner, the guy who founded our firm. It's something called like never love any company more than your portfolio. And we all fall into that trap, like from time to time, right? We always feel like, oh wow, this is the next biggest thing. We're absolutely convinced this is the next TikTok, or like this thing is going to be the next Anthropic or OpenAI. It's like we have to pile in all of our money, or like we have to bet on this thing. Like it can't go wrong. But even in those scenarios, we have to be very disciplined and
Yeah,
making
go
sure
take a
that,
cold shower.
yeah, exactly. Take a cold
Don't
shower, right? Like,
text everyone.
yeah, take a step back, like take a day
Yeah.
off, think it through.
Yeah.
And basically,
Mm.
from for us, what we did was that we have hard line, like in our bylaws, or in our funds, limited partnership agreement or whatever, that states that for every single position, or any single position, it shouldn't exceed. Like for us, was 15% of our fund. So even if we love a company so much, we can only invest up to 15% of our fund, and that's it. Like we can no longer invest out of the fund.
Toby, do
So
you send texts saying to your founders, I love you so much, but I can't love you more than this? I
yeah, I
swear
mean,
I really like you and I think
yeah,
you're great, but this is as much as I can love you.
right. It's essentially, we had to put those guidelines in place. Yes, correct.
Yeah, yeah. But going back to that, because I think this links really well with what you're saying about when VC investors are asked, oh, what are the latest three logos
Yeah,
that you won kind of thing, your latest, all that kind of stuff. But you're saying, it's the opposite. What are the
yeah,
last three logos that like, or the latest three logos you had let go? And when we
yeah,
look at Portco, it's like, usually it's kind of like by a niche, right? Like they're in some kind of set of area and they're placing all their bets. And
mhm,
so they might have, 10 or 12 different, early stage startups that's all kind of doing something
mm,
similar
yeah,
because that's what the investor kind of knows, that area, that terrain, their networks and all that kind of stuff.
yeah,
But then when you look at it, it's like, okay, it's kind of like you bet on the jockey, not on the horse, right?
yeah,
So it's like looking at, okay, I'm looking at these teams. I was able to bring these teams on. I'm funding these teams. Okay, these three might have to go and I have to might say no.
yeah,
So, which is kind of scary to talk about, for founders to be like, oh shit, I might be in the like bottom three, right?
yeah, yeah,
And then also from the investor standpoint, it's like, damn it, I thought they were gonna, you know,
yeah,
so like, how would you talk about that area just a little bit more? Because it is
sure.
uncomfortable, right? Because it's
Yeah,
uncomfortable if you're on the chopping block. And it's also
yeah,
might be something that, like, damn it, I, created a great relationship with, these folks and I invested so much time with them as well. And it's not picking up the speed, or maybe they're not taking all the advice, or even if it's like
mm,
the last leg, right? The last leg of the runway. And
yeah,
it's like, okay, they're not maybe doing everything I thought that they're doing. So then you feel like this disconnect of like, are they actually listening to me? One.
yeah,
And then all of the resentment is kind of like the divorce situation. So it's like, okay, what do we do? Hear this,
yeah,
not only of the quick texts and the calls and stuff like that, but truly when it's like the bottom three of your portfolio, because you always know whether it's healthy or not. You always know your measurement, kind of like who
mhm,
who is in your head as like the ranking of like the bottom three at the moment of like your
yeah.
12 or whatever.
I think that's a really good point, and I would sort of emphasize two parts. The first part is, the jockey and the horse. I actually think it's more important than jockey and the horse. What's more important? It's the essentially the racetrack, right? Like you
Yeah.
have to be first in the right racetrack, uh, before betting on either the jockey or the horse. And if you're in the wrong racetrack, and like everything is not gonna go very well. And
Dolphins
this is,
can't walk, right?
yeah,
On
yeah,
land.
exactly. This is actually the really important thing. It's like
Hmm.
fishing the right pond is more important than sort of
Yeah.
how good the fishing skills are, right? Like it's and this changes from year to year. If we look at sort
Right.
of a um dynamic of a fund, usually a VC fund is 10 years, right? The first 3 years is deployment, and then later on like harvesting, etc. And during the life cycle of a venture fund, there could be a lot of major events happening in the technical or in the technology world, right? So let's just look back in the last 10 years, from 2014 to now. We went through like the social space, right? We invested in Musically, the two people company that later became TikTok in 2014, right? So
And
there's
you
so,
found them through an incubator that you
yeah, that we ran,
guys
yeah.
that you ran.
Yeah,
Yep.
so we were their first board member, gave them the first check, and it was great. And so that was the mobile social was one thing, and then AR VR, right? AR VR XR, all that stuff. It was a big one. And then there's cryptocurrency, right? And then there's like all these derivative of current cryptocurrency like NFTs and like Web3 and etc. And then those things died down a little bit in 2019, 20, and then the AI came out, right? And now this cryptocurrency thing came back again, and there's more AI. So just in the span of 10 years, so much has happened, right? And quantum was another thing too, right? So if you look at sort of all these major trends, from a VC's perspective, is that we have to be flexible enough and be able to sort of bet on the right trend to start with. So say if the current meta trend is AI and crypto, etc., and and if a fund that is only looking at social, for example,
Mhm.
they might be doomed, right? Like because there's just not enough ecosystem
Yeah.
there, right? Like
Right.
right,
That's yeah.
they're against the wind, right? So like
Yeah.
a lot of times is like making the bet on the right industry makes
Yes.
it's sort of more than 50% of
That's why for
investment.
founders that market slide is really, really important.
Yeah, yeah. In the right industry
They
at the right
always
time.
ask about the TAM, and there's a reason why.
Yes, it's not that like these companies, these social companies today won't be successful.
Yeah.
It's just that there's not enough focus, not enough ecosystem from investors and
Yeah.
founders and others around the ecosystem that's currently focused on that, and that could be um, it essentially just means less chance of being getting to success versus other industries that are currently in focus at the moment.
Yeah, and it's that increased area of surface of luck, right? And
Yeah,
when we're going back to this luck thing, it's like, wow, I'm shooting a dart out and I hope it's gonna stick somewhere, you know?
yeah, yeah, exactly. Yeah. Yeah.
So can you talk a little bit more about, I think, there's a lot of I think like there's the thing about like due diligence that feels like maybe a black hole for some people.
Yeah.
And I think that we talk a lot about like preparation, how to invest and deploy. But I guess I think there's a lot of information out there, but I think what information isn't really straight up is the judgment side,
Mm,
the real judgment side
yeah.
as VC. And it's just like you said, you're kind of like the salesperson, right? In a way. So it's like it's one interview after another. There's not so many, accelerators out there. So many like angel investors out there.
Mm,
There's only so many pools, right? And such. And so there's only so many places to knock. So it's like if they are ready and they can show that they are ready and that short amount of time that you can spend, which would be the next, like the 30 days or
yeah.
whatever, how for you to feel like, oh man, they might look really great on paper. Okay. But that's not exactly what they want. How would they be able to showcase in a way that you're like, from your point of view, that is,
Yeah.
okay, they might be ready. Like I
Yeah.
really want to have a chat with them. Not that I'm just like stalking them through the internet, but like,
Yeah.
how can they actually be prepared in a way that makes sense to someone like you?
Yeah. Great question. It's I mean, there are so many things to consider. I think the most, well, there's a couple important things I think I'll highlight. First is, uh, how much the companies have done already, up to this point before they start to raise money or speak to investors, right? So if the company is really just two guys with a slide deck, then they haven't done a lot, right? They probably haven't studied the market enough,
Yeah,
probably
yeah,
haven't done a lot of homework, haven't bootstrapped far enough, and haven't invested enough time and their own energy into the business, then it's probably not as interesting to us. Like what we want to see is, founders who are fully invested, like they themselves have already spent a lot of time. And this is also things that I advise, you know, so I'm also enjoy investing a lot in a lot of companies and also our own portfolios. I go to sort of our founders and tell them, hey, you know, you, the VC money is actually not good to take. If you can avoid it, you should avoid it. Like the best way to go about is to do as much as you can before you raise. Like before your first raise, before your next raise. Try to get as far as you can, try to get as much as done as you possibly can. And that would command a much higher valuation, less shares to be diluted, and for you to have more control of your business, and also for you to be convinced of your own business will actually be successful. So, and that's something we look, right? We try to find, how much work has already been done, and whether the founders, really, have went all in, and the only thing that they're missing is more money to help fuel the fire. But if they're
Yeah.
looking to say like, hey, I want to first convince a VC to give me money before I convince myself to do this, then that's not the right founders we're looking for.
Yeah.
And then the second thing is, um, like we try to dive deep into someone's motivation. And I have a really good story actually from a classmate of mine back in business school. So um, this actually taught me an important life lesson that I used to apply when I worked
Mm-hmm.
with founders, right? So I had this one classmate in business school. He had a rare disease that he was battling with personal. And
Okay.
for many years before business school, like this rare disease, I forgot what it's called, but it's so rare that only a couple hundred people in the continental US has it. And there wasn't a cure. And the people who had it are essentially, going to die in a certain period of time. So he obviously, young guy doesn't want to die. So he was so motivated that he spent, a majority of his working life before business school looking for a cure for this disease. And what is the motivation behind that? It's to live, right? That's strong enough of a motivation for someone to do something like that. And I just remember he was sharing with all of our classmates, and that was very eye-opening because I was thinking, well, if your desire to do your business to be successful is as strong as your will to live, that is, someone that we want to back, right? That is, someone who has met, um, you know, their sort of, life's work, right? That they're willing to devote, the next, not just 5, but like 10, 20, 25 years, into this thing. And that's hard to identify, really, because a lot of times, we look at founders or look at what people do, they look at things from an economic opportunity perspective. They may start a company because they feel like, hey, this is the right time to do this because this thing can make money and I want to make money. Sure. I think that's fine. That's one reason. But there's two other reasons to consider. And the economic reason answers the question of what should I do? Right? Because that's the economic thing. They should also ask themselves, what can I do? Is whether their skill set, their historical like experiences, etc., perhaps whether those things have prepared them for what they will do next. And that sort of help us to answer whether they can actually accomplish something. And then the most important thing they should really ask themselves is whether I want to do it. Like, do I actually want to do this thing? And that answer comes from much deeper within. It's more than just making money. It's more than about their skill set. It's about sort of what makes them happy and what sort of makes them want to wake up in the morning and get to the office and get things done and go home late and redo this the next day, right? Like, and if they don't have the right reason, they're going to give up. And if we look at startups and how they fail, 90% of founders or startups that fail because founders or founding team gave up in one way or another. They didn't have the grit, and sometimes people ask, why didn't I have the grit? Like, why were you not able to persist while other people were able to persist? And the reason is simply that they didn't have strong enough of a reason in the beginning to launch their business. The reason wasn't as strong as their will to live. And if it's really that strong, then they will be able to persist because they have no other choice. They really have nothing else to do. Like it's and we I used to tell our team when we look for people, like we try to find sort of this thing called one-to-one match. It's like, so imagine if a company is doing something, right? Like we try to ask them, we try to figure out whether this is the only team that's capable to do this one thing. And also from the other side, it's like if this one thing needs to be done, is this the team that should do it, or are there other teams?
Hmm.
And if we find that match to be one to one, that gave us a really strong conviction on sort of the reason why, like, well, or like, should I do this, right? Like, from the founder's perspective. So I think that is actually the most important from how we identify companies, and a lot of this is not really about their product, not really about their technology, etc. I think those things it's good to have and it's important to have, but the biggest constant part about a company is its people. The people is always going to be there. The business model
Yeah.
might change. Actually, more than half the companies, their business model will change, and also in a very large way as well. But the people, they're not going to change. They're still going to be there. And those people are the ones that we think is sort of the biggest like factor when we look at sort of evaluating for investment.
Yeah. No, that's really great. And it's truly the characteristics and the core values and their life principles. And that's really awesome how you were able to see that so close as well, because it was like almost like a natural Parkinson law. I was just like, okay, I need to solve my own problem. I got to do it during this certain time.
Yeah,
Like it was his own runway. And it's kind of like what we hear around, entrepreneurship a lot is sometimes the best founders are the ones who just want to solve their own problem
yeah,
because they know the avatar the most because it's them. And so they spent the most
yeah,
time with themselves and they're so self-aware. They understand so much how to talk to that person or resonate and what they're looking for because they haven't been able to find it. So
yeah,
they know, all these little things that the attention to detail really, really counts. And, when you're talking about the unit economic side of you're so right. I mean, that's where we always talk about, lifestyle businesses
mm,
versus going towards that VC route. And then, so having that clear distinction and going all the way back from the beginning of this about like selling the story, the narrative, how you're showing up, how you're talking about it really matters as like your personal brand because it extends that reputation association extends to everyone else who is involved. So they have a clear idea, of what you're doing and, who you are today and the version
yeah,
you are today, your focus today. And so let's go with wrapping up with your focus today, Toby,
sure,
because in this, VC, a career in VC and where
yeah,
you've been and, we
sure,
passed like a decade.
yeah. It's been a long time. I mean, quite frankly, I'm exhausted. I am so tired. I'll talk a little bit about sort of the VC career, the VC industry, just in terms of
Please.
people who want to get into the space. And then I'll also talk a little bit about my own focus from this point forward. So,
Great.
if we look at sort of VC as a career path, 20 years ago, it was great. 20 years ago, the industry was dominated by large name shops, and they aggregate a lot of deal flow and capital. Essentially a lot of money were made there, and people were very all the opportunities get sucked up by these big names, and people who are working at those shops made a lot of money. More of the older guys, right? The old folks sitting there who don't want to retire and who have a lot of relationships with limited partners aggregated a lot of wealth. 10 years ago, this industry actually shifted quite a bit. Money was very much democratized. And there were a lot of small shops, angel investors that came about. Essentially, people who were sort of on the entrepreneurial side made money, and they, have been entrepreneurs, and now they want to sort of make their money work more and contribute back to the entrepreneurial community as investors, which is amazing. And a lot of smaller shops like us, CRCM Ventures, came to birth during that time. And these are sort of younger, hungry folks who are not afraid to get their hands dirty and chase after these deals, who work really hard, and simply because they're just younger and more energetic. And they were able to get into a lot of these deals. It's true. I mean, the age and the ability to stay up longer, it's an absolute advantage in this industry. Um, more so than uh, uh, you know, just simply having some relationships. It's actually really, really important. And especially in this sort of as of 10 years ago, right, where the industry is very democratized and money is sort of everywhere, more than just the big name shops. And and today it's still very similar to where 10 years ago. Money is very democratized. You can find at least from early stage funding, a lot from family offices, individual investors, angels, small seed funds, etc. But the career path is very different. So career in VC today is actually a lot longer than people may think. So what do I mean by that? Like, so imagine if today a MBA student who graduated and went to a VC shop as an associate. Typically, it takes them about 5 to 8 years to make it into a partner role at that firm. And as I mentioned earlier, each VC fund, firm, they manage many funds, right? But each fund is about 10 years. So if we think about sort of from a fund cycle perspective, the next cycle is probably in the next 2 to 3 years when the fund raise money. So imagine this person made partners after 5 to 8 years. They have to wait about 2 to 3 years to get into the next fund cycle to have meaningful carried interest. Carried interest is how VCs make money, right? So it's essentially 7 to 10 years before this person is allocated meaningful carry share on the upside. And that new fund launched, it takes about 6 to 7 years before any money flows back in, right? Because they have to invest, they have to wait, they have to harvest. So that pushes their timeline in their career to about 13 to 17 years before they even see a dollar coming in from sort of their hard work. And that is a very lengthy career, very lengthy versus where the industry used to be before. And it's no longer, to be honest, today, it's no longer an attractive career path for young professionals. At least I don't think so. I think people walking to VC today would they need to really understand what this career path look like. But that doesn't mean that the career couldn't be helpful for them personally, because VCs could also be a launch pad into other promising careers. They could
Sure.
potentially join a portfolio company as early leader. They could
Yep.
potentially find another passion, or while in the midst of sort of working in VC, they might be able to discover an industry that they never thought before, and later join the industry, do something there. They could become angel investors on their own, to to essentially make money outside of the fund, etc. So there are things that they can do outside of the main VC career, that the VC career could be a launch pad into. And we see a lot of people doing that too. But what they need to realize is that the career today, it's no longer as lucrative, no longer as fast as they were. It was like 20 years ago or even 10 years ago, right? So,
And delayed gratification is already a hard muscle to grasp in general.
oh yeah,
So,
especially in the younger generations. I mean, it's
yeah.
very interesting. I love studying young people and talk to them and see what they're motivated. In the younger generations today, they don't want to own properties, they don't want to own homes, they don't want to get locked in. They want to travel around, they want to, explore the world. They're the experiential generation. I absolutely love it. I think sort of their wealth is built more than just, their bank account. It's more about how they, utilize their time. And I think that's actually an incredible life lesson, even for for the older people, like for us, for people who are older than us. I think if we look at sort of our parents' generation and
Mm,
earlier, like we were taught in a way to get a stable job, right? We were
right.
taught in school um, to essentially, make living, to buy a house, to have a family, to settle down, and that is what sort of the American dream or the life is all about. But it might not be, right? If we look at sort of when people at the end stages of their lives, very few people would regret that they didn't make enough money. But almost everyone would regret they didn't have enough time to do what they love. And that's really sad, because if we look at sort of what they can do when they were younger, right? Like the money they make, they can't take it with them. But the time, like everyone is given the same amount of time, and time is actually our most valuable asset. And we see too many people have traded our most valuable asset, which is time, for things that we don't really need after a certain level, which is money, right? So after a certain level,
Or
uh,
want
yeah,
because of false truths
yeah,
or pressures
yeah,
or narratives that you felt like you had to be committed to, but you
yeah,
actually don't.
yeah. Exactly, exactly. So like it's really interesting. So I just really like sort of this younger generation because they realize something a lot quicker than we did. And I learned this even a little bit too late, is that when you buy a sports car, it's not as fun, right? When you're driving it as an 80-year
Yeah.
old versus when you're driving it as a 20-year-old. Right?
Uh-huh.
20-year-old, you can drive it to like a nightclub, you can park it in the front, you can be a big shot and have an amazing time with your buddies and just it's awesome. As an 80-year-old, you'll have a hard time crawling into and crawling
Toby,
out of
you're
it.
just trying to get to Costco.
Surprisingly, I love Costco. I go there every week, and
Yeah, but with your sports car,
yeah.
you're like, I need to change it
Oh
to
yeah.
something a bit more conventional.
Oh yeah, yeah, yeah. Exactly, exactly. Yeah, I know.
Yeah.
I went through that stage too, and I thought, you know, yeah, like now, I value convenience and stuff, but that experiential stuff is really meaningful when you're young. It's no longer fun
Well,
when we're
this is the
old.
thing, though, right? And I'm so passionate about this topic. I'm so glad you brought this up because with founders and operators and VCs who are very linked into this as well, time is everything. Your focus and, not having to deal with all the noise. Because if you're doing something that that the 99% are not doing, you're
Mhm.
not going to be doing what all those other people are doing. So
Yeah,
everything that everyone is excited about, whether it's holidays or doing like certain vacations or
yeah,
reunions and all that kind of stuff, or, Super Bowl or, whatever it is, it might not be the same. And how you have to deal with those interpersonal situations is real. And then
yeah,
also, it's like, how do you better communicate? This is what I'm really focusing on. And even though they might not understand that there might be a downside to it at first, because you have to put all of that labor in and all that dedication because you're innovating. And maybe you're not, maybe you're not a me too, but like
mm,
you're trying to do something, you're trying to
yeah,
win, right? And
yeah,
to do that, you're kind of being an athlete. You're like a
yeah,
business athlete. You're trying to run for the Olympics and you have a coach, which is your VC along the way of like,
yeah,
let's go, let's go.
yeah,
But with the time part of it, it's like no one knows what's going to happen next.
yeah,
And like, it doesn't matter who you are, where you're from. It doesn't matter how long you've been in stocks for, you can be a day trader, whatever.
yeah,
You can have won so much, but no one knows what's going to happen tomorrow. And so it's like how to
yeah,
live in the present moment, how to really understand how to be so valuable with your time of who you want to do it with, where, when, how much, and that's like being in tune of really what you want and need. And by having that clarity to your point of that motivation is like, how do you live? How do you want to live? What is your legacy? What do you
yeah,
want to be remembered for? And I just think it's so important. And to live in that present moment, then in that way, you get to meet other people, you get to experience other things, and it maximizes you. And then you start to love yourself so much. You're like, oh my God, I didn't know this area about me. And I was like, oh my gosh, like, whoa. And that's the awesome thing to just keep on evolving. But like, for example, if you used to like golf, for example, let's say if
yeah,
you're a huge golf person, but maybe that was your past. And today you're huge on pickleball. You're like,
yeah,
the pickleball king, but with the pickleball story of like you want to be at the same level of metric of interest with someone else so that
mhm,
you can create something great and you can maximize that moment and you feel the best that you can ever. But if someone is not, if someone's like, yeah, well, I played pickleball like 5 years ago, they might not have the same level of interest. And then it's not fair.
yeah, yeah. It's true. And I think the last thing I also want to leave entrepreneurial friends with is it's actually the art of giving up, right? Earlier we talked about a lot of companies fail because founders give up, like over 90% of them, right? And we as investors, we want to invest in companies that, have founders who don't give up, like, who are not, who can hold on, right? But there's actually a other side of that. Is the founders and the VCs should also know when to give up. So, like at some point, when you sort of work on an idea and you've tried everything and done everything and it's been years, right? Been like 3 or 4 or 5 years, and things aren't working, or like the market may have passed, or like they have missed it, or some fundamental sort of initial reason to do this is no longer there, right? And the company is still struggling along. It's sort of borderline profitable, or it's living on its own but isn't really growing, etc. Those are like, we call those zombie companies. They're sort of just there and also not there. And those are actually really, those sometimes are more painful than a company that has winded down. And I, tend to have sort of very honest conversations with founders and talk to them to see if it's about time for them to wind down. And the simple reason is because the opportunity cost of their time is more important than them actually holding on and keep going. And that's a hard decision for anyone to make, but it's an important one for them to do because their time, they can use it to do another thing, do something else more meaningful, rather than spend on something that we all collectively know it's almost impossible to recover from, or have no longer have the motivation to do it.
Yeah.
And one stage earlier, even, it's pivoting, right? So I've also witnessed companies where founders who launched the startup with an idea, and that idea, after trying for a year or two, it haven't really worked. But they were sort of too afraid to pivot, whether pivot small, like locally pivot, or pivot globally, like pivot in a larger way.
And
They
we're
were,
not talking about messaging. This is like
yeah,
true pivoting.
yeah, pivoting, yeah. Like they were, not
Yeah.
willing to change their, to do something else. Because they still have time, they still have money, they still have people who are motivated, but they, essentially, it's like do or die on this one idea, and the thing wasn't working out. And there were many, many cases like that. And
Yeah, they just light money on fire.
yeah, and it's not good. It's actually not
Yeah.
very good for, time, and also not very good for the company and for the people. And eventually people will just leave. Like their talents will leave and they will become not motivated and the company will die anyway. Like the founders who can recognize that early and able can make the hard decision early to pivot, it's actually such an important skill that I've witnessed a few people were able to do it really well, but many struggle with it. It's kind of like digging for diamonds, right? Like you dig 10 feet down, you haven't seen it. 15 feet down, haven't seen it. At what point do you stop digging and dig a hole somewhere else rather than keep digging in this current hole? There's no right answer to it, but the founders and their VC guides or advisors should be able to at least have the framework for them to work with to at some point make a
Mm.
decision to say, hey, this is it. We got to pivot. We got to move on to something else. And too many companies make that decision too late, actually.
That is so good. Like if the VC is able to say, this is the framework of like, this is what it looks like to crawl, walk, jog, run. And this area is where, if we can't get here, this is where we're gonna have to pivot. And giving so they know what that looks like. Those goalposts even look like, how far away they really are, rather than, being with that sunk cost fallacy kind of thing, right?
Yeah.
And then but then also the framework of like, okay, this is what it might also look like to wind down, and this is what a breakup looks like.
Yeah.
Basically is what it is. And so it's all very hard because they put everything in it, and it's the biggest risk because they probably have sacrificed relationships, like
Yeah.
the one that you mentioned about beforehand, that founder. Maybe it wasn't what they actually wanted. They didn't know why they got into it, but they just said yes. I mean, we see this all the time with just people. And so, sometimes they stick with it for the long run, but then they weren't ever happy. But I think it goes back to the principle that you shared when you were at business school. The guy that with the rare, thing. And it's just like you learned that lesson of like time is so important.
Yeah.
And so please, like, and you're kind of parenting them in a way. It's like, I'm looking out for you. I'm not telling you that you suck. It's just not working. And so please use your time to do something else because you are so
Yeah.
valuable in this world and you do deserve to be happy in something.
Yeah.
That
It's the art
how
of
to
giving
bridge
up.
that.
Yeah. It's I call it the art of giving up, and it's very
Mm.
it's very interesting. But
Is
yeah.
that the title of your book, Toby?
No, I don't think I. Well, actually, it's interesting. I thought about maybe following this podcast or
Mm,
sometime in the future. I guess for the audience who may be
yeah.
watching, I after spending 12 years in this industry, I'm actually stepping away. I Last month, January, was actually my last month with CRCM Ventures. I'm still going to be a passive investor in our funds, but no longer day to day. And then now I have a lot of time where, for me, is also to sort of think about what's next. One thing is spend a lot of time with my family, with school age children and things like that. But also it's to sort of, discover my next passion and next stage. And yeah, you know, um, like coming back to like if we if we look at sort of the career VC career thing, right, and entrepreneur side, like I don't think I think there's a lot of sort of things I've learned in the last 10, 12 years I can share. So I'm actually going to spend some time writing. Uh, I think, yeah, I'm going to share some of my like just key takeaways and things. Hopefully, all the potholes that I've stepped in or have seen other people stepped in, that I can flatten it a little bit for others in the space and help them to answer some of the hard questions. And essentially, I'll share some of the some of these lessons or some of the things I came across, maybe through some writing. And Yeah, so while it's all fresh in my mind, right? So
Yeah.
that might be
Well, you're,
something I might do.
oh my gosh. Yes, please. If there's any way this can be a catalyst in some way, and this is just game tape for you to have your notes, this is like the new Notion for you. Let's
Uh,
go.
yeah,
No, but thank you for, sharing your wisdom. It's archiving to give it to the next set of folks that are in it, who are truly trying to be active participants in a way that, the holes that you're talking about. Um, it's really hard to get that information, and the meetups aren't exactly very helpful either because it's hard to have, closed door conversations at that level. Like you were saying before, it takes a long time to even know someone, let alone like them, and then actually trust them.
yeah,
And then the other point of like, is that advice that I should just leave on the table? How do I build that
mm,
skill to invite all the advice, but then how do I say this is how I'm going to lead the ship in a way? And that goes back to, the different relationship with the operator versus the investor for the operator to truly lead. And then, but if it's their first time doing that, how do they do that? Especially if maybe they not have experience like how you had experience in Microsoft, for example, and being a big organization and dealing with a lot of stakeholder management and having to do a lot of cross-discipline stuff. Because, for example, if they were an engineer at, even at Fang today, they might be only
mm,
in the lane of
right,
engineering. And
right,
even if they did do some stakeholder management, it wasn't really their problem. And maybe they had check off some things in the interdisciplinary areas of it. But, back then when it was really growing, how to talk to everyone is truly the different hats that you need to wear as an op. I keep on seeing that gap.
yeah, yeah,
And it's tough for me to see that gap. I'm like, no, 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 you got something good. You just gotta communicate. I swear, communicate, please. So I'm so happy to hear that this is your next chapter. You're going on a new adventure, uncharted
yeah.
territory. Next time, Toby, we're gonna see an unexhausted Toby to a very curious Toby, maybe.
Yeah, yeah, yeah. I have, quite a few things on my mind, like areas of exploration.
Yeah,
Not so much ready to share yet, but hopefully
yeah.
soon. But it's yeah, it's sort of exciting new areas, somewhat ancillary to what I was doing before, but some things are also very new that I haven't done before. And while I'm still somewhat young, I can, try these things out and see how it goes.
Yeah, well, I hope you keep on playing basketball. I think that's been helpful in your whole entire
Oh yeah.
trajectory in life.
Oh yeah, as long as I can. As long as I can. At least 3 times a week. Absolutely.
Like you said, the racetrack is really important. I think that court, this court
Yes.
is really important for you.
Oh yeah. 100%.
Well, Toby, thank you so much for sharing. And I would love for you to, if anything comes to mind, if there's anything, let's give it out to the founders, the operators, the investors who are in it. Like you said, it's a long haul. It's maybe
Sure.
not exactly the career trajectory that they thought it was,
Yeah.
as like glorified debt investors and seeing how to
Yeah.
navigate that. um, that side of life and that side of the ecosystem.
Yeah.
So yeah, this has been really, really, I think, helpful, and I'm gonna be really excited to break all of this stuff down. So thank you so much for sharing.
Oh,
I
and thanks
really
for having me.
appreciate it.
It's been wonderful. And it's, yeah, it's great to reconnect again.